2020 has been an unprecedented year, once-in-a-century pandemic that ravaged the world and disrupted the economy like never before. Now, stock markets have seen some pretty wild swings at the start of the year, but after the first 3 months, the market stabilized with central banks around the world opening their purse strings. Liquidity was abundant. It's almost bizarre that the Sensex and the Nifty are ending the year with healthy double-digit returns, considering the ferocious 30% fall from January to March. Mangalam is here with a review of the year that was on Dalal Street.
Well, 2020 has been an unprecedented year for both humanity as well as economies around the world, but it's been a remarkable one for equity markets around the world and India in particular. So let's take stock of what moved in 2020. Well, if you compare it on a point-to-point basis from last December, the Nifty is up 14%, the Nifty Bank is down 4%. It's been the year of the mid-cap as well as the small-cap indices, both of them gaining 20 and 21% respectively. You get it? 2021. But this is only one part of the story. The real part is what took place in this year. It was a tale of two cities. Yes, it was indeed a tale of two cities. From Jan to March, when the crisis first hit us and the lockdowns, equity markets across the world went into a tizzy. We saw the Nifty as well as the Nifty Bank fall 29 and 40%. A big cut is what we saw on both the mid-cap as well as the small-cap indices as well. But come lockdown, come March, also started the printing machine of the Feds across the world, the central banks across the world, and the belief that things may not be as bad as earlier feared. And that started a mother of all bull runs in the next 9 months. In fact, from April to December, the Nifty Bank as well as the Nifty are up 61%. The mid-cap indices and the small-cap indices up 77% and 96% respectively. So that's the kind of stellar rally, stellar comeback that we saw of the bulls after the big battering that we saw between Jan to March. But again, this does not tell you the entire story. So let's take a look at all the stocks and the indices that moved in 2020. The pharmaceutical, the IT index were the indices of this year, gaining 60 and 54%. Metals also played their little bit of solo, and the FMCG pack also steady as she goes, up 14% this year. The PSU Bank index, though, was the big underperformer, down almost 31%. So let's take it sector by sector. The Nifty pharmaceutical stocks, Divi's Labs, the latest entrant on the Nifty, doubled your money this year. Dr. Reddy's, Cipla, Sun Pharma gaining anywhere between 36 to 81%. Similar were the gains coming in for the IT pack as well, which found a fresh new wind. We had Infosys and HCL Tech gain between 60 and 70%, Wipro TCS too, putting in smart gains of 36 and 56%. But then, if you take a look at some notable contributions on the Nifty, Reliance really stands out. 34% is the gain that it put in all of 2020, but that is just one part of the story. It was the key contributor to the rally on the Nifty after the lockdown. Then we had M&M, Tata Steel, JSW Steel, Asian Paints continue to notch record high after record high. The losers, far and few in between. We had the likes of Coal India, IndusInd Bank, IOC, SBI and UPL losing about a fifth to almost 40% of their market value. But then bigger gains came in the mid-cap space. Again, Granules up almost 3 times this year. Adani Group, that group did well. Adani Enterprises up 135%. We had the mid-cap IT stocks do rather well as well. Mindtree was up 100%. Tata Elxsi up 123%. Then we had Aurobindo Pharma too. Escorts, Cadila Health, Tata Consumer was up 87%. InfoEdge and Apollo Hospitals doing rather well as well. Out here too, if you take a look at the losers, they all belong to one particular pack, either financials or the PSU bank space. Had you invested in PNB, Union Bank, Canara Bank or Bank of Baroda at the start of the year, you would have been losing half your capital. Similar with RBL Bank, you would have lost a third of your capital. But then this year saw the biggest gains on the smallest stocks. We had the big movers, something like a Tanla Platforms. I'm not even counting the likes of Alok, etc. Up 10 times this year, 900%. Adani Green up 6 times, 525%. The drug favorites, Aarti Drugs and Laurus Labs up nearly 400%. We had CG Power, management change out there coming in, ownership change, 300% out there. Birla Soft, again, a product of some scheme of arrangement. That stock up 250%. India Mart, e-commerce or trade online increase. That stock up 201% as well. And Dixon Tech, everyone is talking about manufacturing in India, make in India, the PLI schemes. That stock higher by 260%. So the biggest gains were reserved for the smallest stocks. Let's see how 2021 pans out.
All right, Mangalam, many thanks for joining us. That was the year on the Lal Street. But it was not just about mid-caps and small caps in 2020, as you just saw there. The IPO market was buzzing. 16 companies made their Dalal Street debut and raised over 31,000 crore rupees. Reema's here with the 2020 IPO Report Card.
It's been a blockbuster 2020 for IPOs, and we've collated some stats. 16 companies have raised a total of over 31,000 crore rupees via the IPO. But what was staggering is the kind of demand these IPOs saw. You remember the recent ones, right? Mrs. Bector's had 198 times in terms of subscription. Burger King was at 150 times, which means this 31,000 crore of IPOs on offer had a demand of 10 lakh crore rupees. You heard it right. 10 lakh crore rupees is the kind of subscription, is the kind of demand these IPOs had. So that's on the fundraise. And if you look at the numbers, you would see the biggest demand actually came in for consumer names like Mrs. Bector's and Burger King, as well as all things digital like Route Mobile, Happiest Minds. These also saw some very strong subscriptions. So that's point number one in terms of the liquidity gush into the IPOs. Secondly, if you had invested in any of the IPOs, you got lucky, you would be making money as of today. In fact, in all the IPOs except UTI AMC, which is pretty flat compared to its issue price, you would have made double-digit gains had you got the IPOs issued to you. But the biggest gains were in 5 of them, where you would have made more than 100% if you had got those shares. So that's Route Mobile, Burger King, Rosari Bio, Happiest Mind, and Mrs. Bector. So again, it all boils down to consumer, digital, as well as a pharmaceutical name like Rosari Bio. What's also very interesting is the kind of listing day gains. On an average, 43% was the listing day gains that these IPOs saw, and in 6 of them you've seen more than a 50% return on the listing day. Again, on your screen you would see a Burger King, a Happiest Minds, Route Mobile. These are the ones which returned the maximum shareholders. Some of these issues also help the investors make quick money in the form of listing gains, anywhere between 14 to 131%. Chemcon Specialty is the one which tops the list, but apart from that, it's Happiest Minds and Route Mobile which have doubled on debuts. And some of the IPOs like a Route Mobile, Burger King, again, I think these names keep getting repeated. They're the ones which continued with their gains even after the listing pop, which means had you bought these shares after the opening, you would have still made close to about 50% on an average in some of them. And one of the names there also is Gland Pharmaceutical, which got listed at 710, but currently it's hovering around that 2400 mark. So you would have made money even if you had bought Gland Pharma after its opening levels. It's only 4 of the IPOs which are currently trading which opened below their issue price, where we had some negative returns on listing day. But some of the IPOs have not managed to hold on to their listing gains. We spoke about some of them where you would have made money, but in names like Chemcon Specialty, Mazgaon Dock, Happiest Minds, they're all trading below their listing price. Back to you.
Thanks very much, Reema. That was the IPO report card for 2020, and the indications are that 2021 will also see a fairly robust pipeline. But from the markets to the economy, which was already struggling pre-COVID, and it got a major kick to the gut when on the 23rd of March, the Prime Minister announced a nationwide lockdown, which was announced with just a 4-hour notice. But what began as a 3-week exercise was quickly extended into a 3-month ordeal, one that has been touted as among the strictest lockdowns implemented anywhere in the world. To help relieve the pressure on the economy, the government came up with a slew of relief and stimulus measures. It happened in a calibrated fashion. As part of our ongoing series, Sapna Das recounts the key features of the stimulus package that was unveiled over a 7-month period, and by the government's calculations was worth nearly 30 lakh crore rupees. Take a look.
It's only 36 hours since the lockdown has been imposed. And therefore now we have come with a package which will immediately take care of the concerns, the welfare concerns of the poor and suffering workers and those who need immediate help.
This was the first of many such press conferences and was aimed at offering support to the poor and the economically super vulnerable. The package on offer included cash transfers worth 31,000 crores into the Jan Dhan accounts of women, the aged and the disabled, and 5 kgs of free rice or wheat and pulses for 3 months to 80 crore beneficiaries. It also involved the government paying EPF contributions for 3 months for a select few and free LPG cylinders to 8 crore poor households.
This Prime Minister Garib Kalyan scheme that we want to come out with is expected to meet a total of 1,70,000 crores.
But by May, the original 3-week lockdown had been extended 3 times. And with India heading into lockdown 4.0, came another stimulus package and another mantra.
Essentially, this is to spur growth and to build a very self-reliant India. And that's where this whole initiative is called as Atmanirbhar Bharat Abhiyan. And the word Atmanirbhar India is the one which you will be hearing me say quite often.
Details emerged over the following 5 days, and by the 17th of May, we had the first Atmanirbhar Bharat package. It was envisaged at 11 lakh crore rupees, and while it included some direct cash support, it was comprised mainly of loans and loan guarantees and headroom for states to borrow more. Mathematically, clubbed with the 8.01 lakh crore rupees of liquidity relief already provided by RBI and the Pradhan Mantri Garib Kalyan Yojana announced in March, the government had announced a 21 lakh crore rupees stimulus package.
The way this is being counted is being given to you accurately. There is a mix of fiscal impulses and liquidity provision, and almost every country in the world counts it this way.
Some of the features of Atmanirbhar Bharat 1.0 included an emergency credit line guarantee scheme for MSMEs and businesses worth 3 lakh crore rupees, an infrastructure fund for agriculture to the tune of 1 lakh crore rupees to be raised by NABARD, liquidity infusion of 90,000 crores for DISCOMs, and a 70,000 crore rupee fund of funds to support MSMEs, and special liquidity schemes and partial credit guarantees for housing finance companies and MFIs worth 75,000 crore rupees. The FM ended the announcements with a hint that more relief may be offered.
So there are enough such money which is going, not adequate, I grant it. Oh, finance minister said enough money is going. No. I'm not saying there's enough given. But yes, we are doing that too.
The relief package also brought with it critical reforms, like ration card portability under One Nation, One Ration Card by March 2021, commercial mining in coal sector with 50 blocks to be offered immediately, and a hike in the FDI cap for defense manufacturing. It also incentivized states to implement reforms with a higher borrowing cap. Many of the clauses in the 3 farm laws that are currently in the eye of the storm were also part of these reform announcements, as was a new public sector enterprise policy that promised to change the landscape of corporate India.
So if a sector is notified, and in that if there are 10 public sector enterprises, either they will be merged together or they will be brought together in such a way that they are only 4 or lesser. So there won't be mushrooming public sector enterprises in those notified strategic sectors.
But by September, the government was looking at an actual cash outgo of less than 1 lakh crore rupees. As per the first supplementary demand for grants, the government provided 40,000 crores for Manrega, 31,000 crores for direct benefit transfer to women Jan Dhan account holders, 2,800 crores to be distributed to the aged and disabled, and 10,000 crore rupees towards food subsidy for the distribution of free grains, among others. In October, to boost festive season demand, Atmanirbhar Bharat 2.0 offered perks to central government employees to spend more on consumer durables and urged higher capital expenditure by both the centre and the states. And on the 12th of November came Atmanirbhar Bharat 3.0. The government calculated an additional spend of 2.65 lakh crore rupees under the new package, of which production-linked incentive schemes were estimated at 1.46 lakh crores. Without the PLI scheme, additional expenditure stood at 1.19 lakh crores, the lion's share of which went to additional fertilizer subsidy. But this was actually arrears already due. It also comprised 18,000 crores in additional spend towards the Pradhan Mantri Awas Yojana for urban India. In addition, the government expanded the emergency credit line guarantee scheme to cover 26 stress sectors and extended it till March 31st, 2021. This was to disburse the unused amounts under the original 3 lakh crore rupee allocation. Further, it launched the Atmanirbhar Bharat Rozgar Yojana, under which the government would pay EPF contributions for first-time employees recruited between October 2020 and June 2021 for the next 2 years.
I just give you a quick back of the envelope calculation. You may go back, do your homework and come back to cross-question us. You're welcome. Total of 15% of the GDP is what has been given here as stimulus till today. Total of 15% of the GDP. You may divide that between the government and the RBI. Never mind. Just the government, 9% of the GDP.
In New Delhi, Sapna Das.
Well, up next, Apple added a Google in 2020 and Tesla is now as valuable as 90% of the global auto industry. Prashant Nair with the 10 bizarre things to happen in 2020 after the break. While 2020 has been a year like no other, Apple added a Google to its market cap. Tesla's stock soared to new heights and the company became as valuable as 90% of the global auto industry. Prashant Nair is here with the 10 bizarre things that happened in 2020.
Well, thanks for that. There is far too much to try and cram into one piece to summarize 2020. So what I wanted to do is basically put out 10 things which are not just remarkable, but also things which maybe we will probably never see again for a long time. So let's dive straight into the first one. This was the year which brought a whole new meaning to the term, don't fight the Fed. The Fed basically added $3 trillion to its balance sheet in 5 flat months. The prior $3 trillion took 5 years. That's how fast and heavy Fed came in when the COVID crisis struck. Sticking with central banks, here in India, even with inflation near 7%, RBI has persisted with what amounts to ultra-easy monetary policy. This has allowed short-term rates at record 3% and system overflowing with 6 lakh crores of liquidity. You would wonder what has all this liquidity done to asset prices, right? Now, let's take a few examples. Apple, the largest company in the S&P 500, added the entire market capitalization of Google. Basically, Apple added a Google. And Google, by the way, is the 4th largest company in the S&P 500. You'd say that, well, Apple makes a lot of money, deserves to do what it did. What about a company like Zoom? Zoom was valued at under $20 billion as it came into this year, which did not even, by the way, make it eligible for inclusion into the NASDAQ 100 index. Yet, at its October peak, Zoom was valued at $160 billion, the same as Cisco, despite only having 6% of the revenues. Let's move on. Tesla, right? It's gotten a lot of attention this year, and maybe rightly so. In 2020, it was briefly valued at 90% of all listed auto stocks in the world, despite Tesla producing only 1/70th of the total global auto volume, unit volume. Let's move on. 2020 was also the year when the notion of negative oil prices became real. I mean, who would have thought? It was that extraordinary day in April when oil prices hit -40. Another memorable day was the 9th of November for everyone as the world breathed a collective sigh of relief that a safe and effective vaccine was making its way through clinical trials. But, well, on that day, volatility exploded to unprecedented levels. This one is for the ages. Price momentum took the largest one-day tumble on record, moving 16.7 standard deviations in Europe and 13 standard deviations in the US. This is something which is not seen before. The next one is pretty significant as well. the amount of retail trading activity which we've seen. I focused on this the first time about 6 months ago. In India, for example, between April and November, 84 lakh new demat accounts were opened. Same period last year, the comparable number is 40 lakh. I mean, that's how large the surge has been, retail participants flooding into markets. Bitcoin came to be accepted as mainstream. Lots of institutions said, well, we will accept it as a legitimate store of value. The price of Bitcoin went up 200% this year. And to wrap all of this up, point number 10, which kind of sums this up as well, global stock market capitalization has now jumped to above $100 trillion. That is 116% of world GDP. It's at an all-time high. Well, these are 10 things which I found worth mentioning, which were weird, bizarre, extraordinary. I'm sure you can find many things that you'd want to sort of put onto this list. But remember, a lot of things I mentioned here are still work in progress, things which we will continue to track into the new year.
All right, with that, it is time for us to wrap up this edition of Rewind 2020. And we will, of course, track the strange, the bizarre, the extraordinary in 2021 as well. Till then, from all of us here, goodbye. Many thanks for watching.